providing good support to this market. And despite the weakish kind of cues that we got from Asia, I guess, Lata, I mean, it's flat to neutral. I mean, this can't even be called any kind of a correction or profit taking at all right now.
No. If you looked at the mid-caps, you'll actually say it's a very good day. I mean, we are closing in on 21,000 on the mid-cap, which means we'll be only about 700 points or thereabouts from the all-time high of 2018. So mid-cap is firing on so many cylinders. HEG and graphite are both up 5 to 6%. Then the KPR mills, the SP apparels, all those textile-oriented companies, they are up about 3 to 4%. And then the food companies, you guys already read out, all of them, the burgers and the Jubilants, all of them doing well. And then you have the other set, the Dixons, Ambers, the CG Power, all the consumer companies. It's firing on so many cylinders. Okay, Mitesh, actually blank check to you. So many mid-caps are firing. Is there anything new that's come into your radar?
Lata, I think you're right to highlight that. We also had one mid-cap stock after a long time in the trading list, which was Lovable Laundry. I think it's hit the upper circuit. But that's a space which is kind of playing catch-up. So I think a lot of action happening over there. The one, which, I mean, not exactly a mid-cap now, but the one which comes on radar is Jubilant Foods. I think, very strong pattern and a fresh high. I think getting past 2650, 2660 zone was very positive for the stock. I think they should see more momentum unless until that level is violated on the downside. I think I would look at targets of 2850 here.
Okay. Mitesh, thank you very much for being with us through pre-market and giving us the first advice on the markets after they open. 13,700 is here. Is that a new high? Did we go to 700 yesterday?
No, okay. 700 would be...
Then fireworks, please. 13,700 is here. Nice number as well. And, well, we are a distance away from 31,000 on the Nifty bank, though it has to go up to 32,000 to make its high. And Sensex as well will be, I think, 47,000 before long, 46,720 at the moment. I think 50,000 will be a great celebration moment.
Imagine
I know we are
that,
a distance away.
But the rate at which things are going, and that's the thing, Lata, I mean, even if you look at the Nifty's, technical charts, it's just crossing, the money simply crossing every sort of worry, every issue.
Money papers were all cracks, as you said the other day.
Yeah, so it's just higher highs last couple of days in this market.
Well, that makes the stock picker's task that much more difficult, and we have one of the best in that field. Manish Sonthalia, Head Equities PMS at Motilal Oswal Asset Management Company, joining in as a market master. Good morning, Manish. Thank you very much for joining us today. That's the first question to you. Would you now rather concentrate on the mid-caps? Because at least there we are away from 52-week highs in many places.
Lata, in fact, during the pandemic, in the month of March and April, we were very clear that, markets were underpricing or undervaluing the mid-caps or the broader market space in a big way. It was only the large caps. So, we had suggested to our clients that one should move one level down, which means if somebody was invested in large caps, you should move one level down to the mid-cap space. If somebody was invested in the mid-cap space, should move one level down to the small cap space. It has paid off with the index, NSE small cap index moving from 1st of April by around 90%. So the thesis has actually played out. And I think with the opening up of the economy and, the news surrounding vaccination, all this augurs well for the broader economy and the broader markets as well. So I think the broader market still has legs to go on the upside. We already invested in it. We advise our investors to actually deploy some capital in the broader market space. Not to say that large caps are not important, but the broader market space offers a better risk to reward ratio even now.
Okay, all right, take that point, Manish. Good morning. But I guess you can't help but asking questions whether, there are pockets of over-exuberance building up. And I'll straight away get to this whole food story. I mean, yes, Burger King was a good IPO at a good price, but then let's see what's happened after that. So what is your thought on the entire space, the way specialty, Jubilant's now doing biryani today, and then the Bector Foods IPO and the complete sort of frenzy surrounding this space? Your view?
I think it's a bit overdone, the entire foods category, whether it be the Nestle's of the world or Jubilant, Westlife, or even Burger King. I think the fundamentals really don't support the prices. What we are seeing in many of these small names which have come out with an IPO or otherwise, because economic activity is just about picking up. Pre-COVID levels are just getting reached. So there's nothing too great about what's happening in the entire foods category in the mid-cap space. Of course, the outlook is good. There is a propensity for the economy to open up, and increased activities would mean traveling, etc. But all of that is broadly priced in, given the rally that we have seen in many of these stocks. The long-term stories, of course, remains intact. But for the short-term, medium term, I think most of the positives are already priced in.
Okay, well, the two pockets that are doing really well right now in the market, one is cement. So once again, there's big buying seen in names like Shree Cement, Ultratech Cement, been the big gainers lately. And the biggest gainer this year is Divi's Labs with 100% gain, and that's the biggest gainer today as well. So ending the year in style, perhaps 2.5% higher on Divi's Labs. Manish, hi, good morning. I have so many questions for you, but I have to start by asking you about the consumer durable names, because you have these stocks like Dixon Tech, Amber Enterprises do extremely well up until now, but there's this whole PLI scheme as well which could eventually benefit some of these companies. Is there still more to go in this space, or do you think it's become a bit cluttered?
I think this PLI scheme is a game changer, and it will get extended to many other sectors. Right now, the white goods sector is in the limelight. So you have incentives from manufacturing come about, not only for the Dixons and Ambers, but also for the incumbent companies who are planning to invest in in-house capacities like Voltas or Havells, etc. So I think this is a good scheme, and it will only give boost to manufacturing. There's one way that you can offer subsidies to everybody, or there's another way that you can offer subsidies to a few companies which can really scale up. So China had this policy of doing it, the PLI scheme that we had done, and it has been quite successful out there. So I think it will augment manufacturing in a big way in the white goods space, and the companies which can take advantage of these schemes can actually benefit immensely. Markets are obviously pricing in next 2-3 years of growth, but I don't think there's any scope of correction in these names because the outlook remains quite good. And given the under-penetration on many of the white goods spaces, the penetration levels are only going to improve going forward. In that backdrop, I think, whether it be AC manufacturing or mobile phone manufacturing, there is more to come as far as this entire space is concerned. Given the fact that there's simply too much of under-penetration in many of the categories in the white goods.
Yeah, but that's what is already priced, isn't it, Manish? I think Sonia's question is, will you just keep what you have, or will you even buy at these levels?
We have the Voltases of the world who are also planning to augment in-house manufacturing. We have Havells in some of our schemes. We have Dixons in some of our schemes. The thing is that we will continue to invest in these names even with rising prices on the stock, on the stocks per se. Sure. And we think we are very positive on this space going forward. So action is that we will buy even at high prices. Okay,
now let's speak about that. Let us come one level lower theory of yours. Would you come to textiles? That's apparently the best next place where a PLI and another other kind of policy is in the works.
So textiles is a very large, unorganized space that we have in India. Of course, it's a very large sector. But if they were to implement PLI in the textile space, and you have some of these players take advantage of that, you can have a segmentation of the market between the organized and the unorganized, and the organized will surely benefit out of it. So definitely textiles remains on the radar, and we will look out for names which can benefit disproportionately out of this.
Okay, got that. Manish, I remember in an earlier conversation, and at least back then you used to have an optimistic view on some of the OMCs, and you did see deep value there. Of course, prices have moved up since. But given where we are now, crude is back to 50. Though, a lot of the brokerage notes tell us that they're still sitting on very healthy marketing margins, these companies. What would your call be here?
Marketing margins are one thing. They are very healthy. They remain quite healthy even during the pandemic. It was just to do with the refining margins, which collapsed, went down to even negative or zero. Now we are looking at inventory gains, and with rising crude prices, you should see positive refining margins. Of course, integrated players who have downstream projects into petrochemicals, etc., are going to benefit immensely out of rising crude prices, because that much more value addition comes to the petrochemical space. I think valuations on the OMCs are very anemic even now. You don't, given the outlook on the profits for this remaining 2 quarters and even for the next year, I think with, let's say, a 7-8 prices to earning multiple or a 30% payout ratio, I think valuations have just not yet factored in all the positives, and there is still room on the upside for the oil refining companies. And it's not only about the marketing margins. I think it's about the inventory gains and the positive gross refining margins that you are seeing.
Okay. Another space I wanted your view on was commercial vehicles, because Ashok Leyland, as we speak, has hit a fresh 52-week high. And it's been the 6th straight month of an improvement in the medium and heavy commercial sales. Although it's at a slow pace, but improvement nevertheless. Is it too late to jump onto this bus, or do you think there's more to go?
No, absolutely not. I think the CV cycle will turn much before what was expected. You seeing the Class 8 trucks growth, and not only in India but globally. Given the vaccination, the movement of the vaccines, etc., CV cycle is turning up for sure. And even in India, it's expected to turn up much before than what was expected before. So it's not too late as yet. There's still disbelief that the CV cycle is turning, and there's still opportunity in the CV space, both at the auto components level as well as the OE level. And markets are just pricing that in, and gradually and slowly you would see markets realize that the CV cycle is turning up faster than what was expected. And in that regards, the likes of Bosch or Bharat Forge or even an Ashok Leyland, etc., just warrants the prices that they are trading at, and it has more legs to go on.
Okay, good to hear that.